About to share the stuff on here.
Welcome, 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 everybody. We are back in the building. Let me get my IG family going over here, going live on the IG side.
IG side.
There we go. So,
IG.
welcome, Kyle, Sean. How you guys doing today?
Great, great. How you doing?
Good, good, doing good, doing well. Blessed, blessed.
Absolutely, lots of meetings. We're gonna keep it real, really light. I'm gonna share this. Make sure as you're coming in, share, like, and share, because we're going to go back to the basics.
Yep.
Back to the basics. Here's what I ran into over the last week or so. I've been sharing that we're planning on taking the company public, that we're going to raise capital, that we're going to buy other companies and invest in other companies, help them scale and grow. And the question that I got more than once was, well, what does that mean? Like, what does raising capital really mean? And so, what I want to do is, I want to go all the way back to the basics to really explain what the concept of raising capital is. I know they've been doing it since the beginning. Why is it available to us now? And how does it benefit us? So, either one of you guys want to jump out there and just start with the basic, I mean, nothing, basic definition of raising capital. What is it?
Right. I believe. Well, first of all, when companies raise capital, it's always been there basically, right? Companies have always been allowed to sell their companies, right? Sell parts of their companies. So it's always been there, right? So, but what a lot of people don't understand is, what people try to do is they'll go to banks and they'll go to all of these other hard money lenders and put up collateral, and they think that's the only way of doing it, right? But they don't understand that there are vehicles out there that you can basically purchase, right? And or create rather, and they will allow you to sell small pieces of your company called shares to other investors. And you can raise a lot of capital doing it. I mean, there's companies that raise millions and billions of dollars. So that's basically how it came about. But it's been there from the beginning, especially if you have like corporation and when you have LLCs, you can sell like the units. But yeah, so but now it's kind of evolved to where with the Jobs Act of 2012, right, that Obama signed, he basically expanded the opportunity. So now small and medium sized businesses are able to take advantage of what larger businesses throughout the years have been doing. Back when we took our company public, really the only way you can go public if you was a small company was through a reverse merger. Now, because of Obama 2012 Jobs Act, he enabled small to medium sized companies to do IPOs as well. So now we can participate in doing IPOs, which was pretty much unheard of 15 years ago, 20 years ago.
Okay, Kyle, jump in with your version of what is raising capital.
Yeah, that's actually, you know, the reason why Sean and I were able to do what we did as a company and as a business, because we were venture capitalists first. So what happened is we learned the business from raising capital for other people's companies. And when we did that, we were like, man, hold on, we just as sharp as some of these people. We figured out we could do it ourselves. And that's what most people have to understand. You got to realize that, look, if you just study and do what you do and pay attention and learn, you know what I mean? You could do it. While our buddies were out there buying cars and boats and depreciating assets, Sean and I, we were married. We had families. I was married when I was 21 years old. So we had obligations. So we couldn't go out there and go to the club and kick it or do the kind of stuff that they were doing. We had responsibilities. So I believe that was a major factor that really kind of made us kind of focus and bear down and really say, wow, you know what? We could take this to the next level because we know we're smart enough to do this. And we just paid attention to, who we were working with.
I love it. When I think about it, it's very clear to me. And if we, whoever's listening, I want you to go on IG because this is where I see it the most. And it's funny that Isaac Hayes the third is raising capital for his fan base app, but he's on IG publishing it. So he's spreading the word on IG. But I'm watching as he's raised 400,000, a million, 2 million, 3 million. I think today I saw he's raised over $8 million. And so, what does that mean for him? It means that Isaac Hayes III created something. He had an idea for an app that would be a competitor to your Facebooks, to your IGs, to your Twitters or your X's. And he had a dream. And that dream has sizzle, as Kyle always talks about, being a competitor to the rival. And so instead of him going to a bank and saying, I need 500,000 on a loan that he has to pay back, or bootstrapping, he probably has some money, or borrowing from family or friends that runs out. He elected to go and raise capital. And so I know he started out with a regulation CF. I think he's at a regulation A now, last time I looked. But he is now allowing investors, you and me can do it as well, to go in and buy shares in his company that eventually he is probably going to take public. Now, whether or not he takes it public or he sells it or whatever happens, those who have invested, because I think one of the other things that people miss is, well, why will an investor give you money for something and they don't get their money back right then? It's because they're waiting for the event at the end, whatever the exit event is. You're either going public or you're selling it. And at that point, that's where all the money comes back. And so those people, and we've talked about it before, when you IPO, when that company goes public and it hits the stock market and everybody else can go and invest in, those early adopters are the ones who cash out. And so really, Sean, if you could give me the numbers, if you invest in the beginning, you're selling shares for this amount, it goes public potentially at this amount, how does the investor make money?
Right. So let me add on a little bit to what you were saying previously, and then I'll answer your question. Uh, so Isaac Hayes III, he raised approximately, let's say, $8 million, right? What would it take for an average person to go to the bank and get an $8 million loan? Because you know the credit stuff. So what would it take?
A blessing? Collateral?
Not only that, let's add to that, Sean. And how long did it take him to raise $8 million? So
Couple weeks.
you got to add that
Right.
factor in there.
Yeah, a couple of
Yeah.
weeks.
So I guess the point I'm trying to make is it's a lot easier if you're trying to do something big, right? It's a lot easier to just sell small pieces of your companies to investors that want to participate. For example, doing an IPO or taking part in your company or something they want to see grow, right? Investors are gamblers, right? At the end of the day, what they're doing is they're betting on you and your company and your board, things of that nature, to take their $1, right, and make it into 5 and 6. That's basically the name of the game, right? So if small to medium size, I mean, I didn't come from money, right? My mother worked at General Motors for 27 years, and I think the highest she was paid was $60,000. We never seen a pretty penny in our house, right? We never got the extra Christmas gifts. It was 4 of us. I got 4 brothers. So for me to get an $8 million loan, it was hoop dreams. It was like trying to compete against Michael Jordan in the game of horse. It's just impossible to win. And that's what keeps us behind the 8 ball, because we don't know that if we have a pretty good a pretty okay company, it doesn't need to be $1 million company, but it has a sizzle to it. Because Isaac Hayes III, he started off somewhere, right? and now he's $8 million better, basically. So it's a lot easier for me to raise the capital than go to the bank, ask mom and pops or ask whoever to give me the collateral so I can get the
Hmm.
$8 million plus the good credit to get the $8 million. So I just wanted to kind of make that point because that's the problem a lot of people be having. They just don't have the net worth and the family members with the wealth in order to do stuff like this. But to answer your question, what do investors get out of it? First of all, an investor can get like an interest rate off of it, right? So, for example, like for example, you may sell an investor 15%, right? So he may say, "I'll give you $1,000. I'll just using arbitrary numbers, and I want 15% on my money," right? So now you got to pay him that $1,000 plus 15%. It may be due quarter, biannually, yearly, every 2 years, whatever. Then eventually the money's paid back, just like a loan. Second way is it may be it's something like you may say, if I give you $1, I want $3, right? In 2 years. So somebody give you 10,000, they want 30,000 in 3 years. What I like, right, is I like the IPO way. The IPO way. The reason why is because a lot of times when you're a small company and you having to pay, and you have to pay back interest, or you have to pay back, the the stock plus, 20 times, 2 times or whatever, right? It cripples your revenues. So now you can't do a lot of the stuff based off of your revenues. You got to continue to raise capital in order to achieve these things, right? Because now you're going to have these payments that's going to be starting to hit your revenues and things of that nature. And you can't raise capital to pay your interest rate. You're getting into Ponzi schemes, things of that nature, right? I like the IPO way because if an investor give me, let's say 10,000, and we're not going public to 24 to 36 months later, I don't have no participation in what the stock does when it goes public. That's the market makers and things of that nature. So now I don't have to pay any money back. So that basically means, Tyrus, you could give me $3 million and I don't have to pay you back. I can sit back and I can build up my business with your $3 million, build up, increase my company's valuation. So now instead of my company being worth $1 in 1 year, right? The first year, 3 years later, it's worth $5. So now the investor, if does do an IPO, he came in at $1. Now he makes $5 off of his money. Now he can sell it to people just buying it at $5 who think it's a good value. So that's how investors make their money.
Kyle, what do you want to add to that?
But you know what? One of the things that I truly enjoy, and again, Sean and I, we got a chance to realize this with the company that we worked at because we worked with the same firm. I did not know that you could raise capital or you could sell shares if you did not have a stockbroker's license. I'd never heard of that before. So I always thought
Yeah.
that, well, you got to be a stockbroker, to be able to sell, stocks. However, when we were educated that you can do it as long as it's your company. Now you can't sell other shares, you can't sell Apple or Microsoft or anything like that.
Hmm.
But if it's your own company, you can do it. That right there was earth shaking to me. That was life changing. So I just want to make sure everybody understands what Sean is telling and everything. But you got to realize it's the fear of the unknown. I'm proud of his brother Isaac Hayes III. Man, I wish that brother much success. Keep on going because what we're preaching and what we're saying to people, he is doing it. So I'm
He's
like,
doing it.
brother, keep doing it. Raise that capital. Do what you're doing it. Do the way you're doing it. But more businesses need to know. When Sean and I went public, it was 14 minority-owned publicly companies. Today, with all the technology, with everything out there, with the Jobs Act, there's only six. What in the world? We're going backwards. So are we
Yeah.
not getting smarter? What's going on? Do we not have the same, access? Not only that, let's take it a bit further. When Sean and I did a Regulation 504D, the max you could raise in 1 year was $1 million. Today, the max you can raise in a Reg D 504 is $10 million. A year. How many businesses need $10 million a year? If you knew you get $10 million in your business, wouldn't you join our class as soon as possible to learn how to do that?
The other thing,
Tyrus running across the bottom, let them see how to join our class because they need to know how to get $10 million in a year. And again, and we can go higher than that.
the other thing that I see often is we're still stuck in the cycle of we just don't hear it. We see it, but we don't hear it or don't digest it. Because I love that we have a lot of education happening around stocks. Because before that was elusive to us. We don't invest in the stock market. We don't buy into the stock market. I don't want to lose all my money in the stock market. All these fear things. There's a lot of fear talking. But now there's this move to investing in the stock market. At that point, you're buying into someone else's
Buying
company.
somebody else's company. Yep.
So you're for everybody that participates in buying stocks and you own stock, you're participating in making somebody else rich. Now you are getting something for your stock. Now, it's not like you're not getting a return. But can you imagine if it was you on the other side and you have a business and someone is investing and buying into your business? You are constantly bringing revenue in, you are growing, and then you're constantly not having to worry about where the next capital is. Here's why I believe every business should look at raising capital as a strategy. I don't know how many business owners I talk to who they need to make money within the next 30 or 60 days or it's over for them. Now, I'm actually confused because I look at SBA statistics. Most small businesses are in the red for the first 3 years. 3 years of you building and putting energy into the business and you're attempting to grow it and you losing money. So I don't know where the new generation of business owners come from that think they shouldn't lose any money. They don't have to invest any money and then they're going to make millions of dollars. I don't know where that happened. But I talked to so many business owners that if they don't make their money back in the next 30, 60, 90 days, that they out of business and they can't work with you. You got a guarantee. I'm like, well, you got to go find the person that's promising you that. But it never dawns on them to raise capital. It never dawns on them to talk to an investor. It never dawns on them to network and ask individuals. It's like we're not even in the right rooms and having the right conversations because nobody ever told me before I met you guys to go raise capital. They would say, well, you could go get a loan. You can go to a CDFI or you could go to a hard money lender or you could go to a one of those high interest places instead of going to a group of investors or going to a meeting and saying, hey, look, I have this idea. Would you like to invest into it? Use of proceeds. As we're getting this money, what can we use the money for that we're raising from investors?
Yeah. So you can use the money on your business functions. You can use it on hiring professional, like help. Like you can hire like a CFO. You know, um, you can hire. I mean, you can basically bring people on that can take your business to the next level. Um, I mean, pretty much anything to help your business grow, you can do it, and then you itemize it in your business plan, and you have a generalization of it in your pitch deck.
Yeah,
I
for
love it.
instance, like our class. If you don't have education about this or how to raise capital, then you could use it to get into our class. Learn how to increase the revenue that you have and grow it. That could be part of use of proceeds. Basically, growing your business. Inventory, space. Mergers and acquisitions. Acquiring companies, getting technology, hiring key individuals. I mean, whatever. As long as you ain't out there buying boats and cars and lavish parties and things like that, depreciating assets. That's again what you use it for, payroll, whatever. But don't do the stupid stuff. That's how you get in trouble. don't end up on my favorite television show. Everybody knows my favorite television show, right? American Greed.
Yeah.
Don't do bad stuff. But you know what, Tyrus? I want to give all of our listeners, I want to give them a nugget today. All right. I want to give them a nugget that you know what, this time that you've spent with us is well worth it. Matter of fact, this is the price. This is better than the price of entry. Oh, it was free. So guess what? So I'm gonna give you something why it's so important to get into our class. We talked earlier about Isaac Hayes III and what he's doing. We're giving him free publishing. Matter of fact, he's getting free publicity.
He is.
He gets some free publicity. So brother, man, you better make it happen, all right? But think about it, fan base. I love what this brother is doing. But you know what? If you have a business right now and you don't have a mobile app, I'm giving you a nugget. Guess what? Get a mobile app associated with your business right now. Why do I say that? Because the mobile apps today is just like the dot-com era when we was coming up. When Sean and I was coming up in the 90s, that was it. Any company that had a dot-com in their garage, wherever they was at, we could raise money for them. So how many companies did we raise money for just because they had a dot-com?
Yeah, hundreds. There was a lot.
It was crazy. So if you don't have a mobile app, add that to your business, and guess what? Now you can start raising capital or developing your mobile app. Let me say that again. If you don't have a mobile app on your business, add it to what you're doing or start getting one developed. And then now you start raising capital and you start telling the investors, hey, look, this is what we're doing. We're taking everything we're doing right now and we're putting it on an app. Now, do you want to make that app free? Do you want to have a 99-cent charge for the app? Whatever. But the reason why you want to do that is because guess what? If you can set up a mobile app and you own the platform of the mobile app, do you understand? You have all of the data going there, and that means you now have another revenue stream. If you are not up on data as a revenue stream, it's the new gold rush. And if you have that coming in and you have that part of your intellectual property in a mobile app, you just increased the valuation of your company. That's your nugget for today.
Yeah, I was actually, I'm glad you brought data up. I was talking to a client earlier, and he was talking about, how Amazon, when you go and sell something on Amazon, a book or whatever, you don't get the customer list.
Mm.
They control the data. You just get paid whatever your cut is off of whatever you're selling on there, but they have the data. It's in their database. And so that's a great point, Kyle, you always have to be in a position to where you can control the data that comes into your company and then you can use it. Use it for marketing, use it for lookalike audiences when you're running ads. There's so many different things. What I also learned is there are more people actually doing this than we realize. We're just not in the right circles. All of these tech companies that we do look at, your Facebooks, your IGs, like all of these people, they were in networks together.
Yeah.
They work for similar companies. Elon Musk and the PayPal Mafia, like all of these guys, whether they come out of Stanford on the West Coast side, they were in groups of like-minded individuals. And they go right back to those same groups and they raise money from each other. And so it's like they just have a circle of money that just circulates. So whenever they have the next big business idea, they just call up the group and say, hey, I'm looking for some investors in this idea. They're not putting up their own money. They could, but they don't have to.
Why would they? You know?
I was looking at the Y Combinator out of Stanford. I think that's out of Stanford. They will give you $250,000 when you go through their program. Then I think they'll do another $500,000 when you kind of a little bit down the road, but they take 7% of your company. So a lot of you out there are saying, well, I don't want to give up any of my company. It's not like these companies are taking the lion's share. They only take fractions of your company. And so for you to be held back by that, I think, Sean, you go into it really good and you explain it. Why are we so afraid to give up any of the company?
Because everybody wants to do it themselves, first of all, right? They want to be able to say, I own 100% of my company. But if you look at it like this, right? And we always use Bezos and these guys because these guys pioneers. They've been in the business for a while, and they have they've made it basically, right? So, but he only owns 9% of his company. So, especially this goes for people of color too, right? And I hate to kind of say it like this. The way we grew up wanting to own something, like own it. We own. Nobody's helped us and stuff like that, right? We own it. But the real way of doing it is and increasing the valuation of your company is to have, let's say, 1,000 different smaller owners, right? To give you the capital to build your business up. Yeah, you may own, let's say, and let's say you may own 51%. You still are the majority owner. But let's say you own 9% of your company out of like 10,000 shareholders, right? The people that buy the shares, they're called shareholders, right? So you that 9% that Jeff Bezos own, he is still the majority owner. So that basically means if somebody wants to oust Bezos, right? They have to go out and they have to buy, let's say, because the executive, everybody might own 15%, right? They got to go out and they got to purchase like 16%
Mm-hmm.
of them shares on the open market, right? And now, but that's going to be hundreds, maybe almost $1 trillion. Nobody's going to do that, right? Nobody's going to go out there. So he cannot be overtaken. There's no hostile takeovers. Another example, and I sent this to Kyle the other day, but the Mark Zuckerberg. He basically said that he hires the brightest and the best board of directors. He brought them on, basically, right? He's not worried about anything. He said because I own the majority of the company. That majority in his book, right, is probably only 10%.
Yeah, I think it's 10 or 12%.
Yeah,
And Sean, on top of that, the way the voting rights are, for every share he owns, I think he gets 4 votes
he
to
owns the
one.
voting rights. So it's nothing you can do. So what we do is we set up companies just like that. So no matter what happens, you always in control. So that's what we do for a living.
You're on mute, Kyle. Jump in there.
So that, yeah, and I'll add to that. Sean, we were at an event. Matter of fact, the event that we met you at, Tyrus, and Sean was talking to we were talking to businesses, sharing what we were doing, and Sean talked to a guy that had over 100 tax offices. This guy is making buku dollars. And Sean said to him, man, have you ever thought about taking it public? He said, oh, I want to get taken over.
Yeah.
Sean, we scratch our head. We're like, what?
Yeah.
But but to us, it's like, we set these things up. So we're going to set you up so that you're like our company. We were never worried about taking over. And
No.
another thing, what people got to understand, Jeff Bezos has 9% now. But a few months ago, he had 13%. So
Mm-hmm.
he's selling off, and as he's selling off, his percentage is going down. But it doesn't matter because that bit that he sold off, it was probably billions of dollars that came back to him. And when we was in Miami, we was speaking at a gathering out there, and we went over this bridge. And I remember showing we saw this boat. I think it was Bezos, because I
Yeah.
think his boat was pulled into Miami at the time we were there. You know that wasn't no regular boat.
No.
Was it all black?
It was black and it was gold, and it was a huge
Yeah.
yacht. And I was like, yo, I think that's Bezos's. So yeah,
It looked big. When something look big and you're far away, it's huge.
Yeah, yeah, yeah.
and I'm a sailor, so we did that. But I just wanted to add that because people, again, they're just afraid of the unknown.
Yeah.
And so if you don't know about it, then you're going to say, oh, well, I don't want to get taken over. And they need to look at that Mark Zuckerberg clip because he's like, I ain't worried about nothing.
Yeah.
I I know some people that were on a yacht, and it was a nice size yacht, and they said Jeff Bezos' yacht pulled up by them, and it just eclipsed it. It's like theirs would fit in his more than one time.
Your boat was shining bright. Then Bezos put shade on it.
It was huge. We were like, oh my goodness, yeah, it was huge. And I think they said he was down there because I think this is during the time you heard that he was moving to Florida. So we were there at that time, and we're like, I think that's his boat
Yeah.
because it didn't resemble anybody else's boat. Was not even close to that one.
Yeah, yeah. Oh, Bezos. All right, to reset the room for everybody that's just joining us or wondering what we have been talking about, we've been talking about it. Just basically, what does it mean to raise capital? What does it mean to have a great business idea, a dream, and not have to go to the bank? To be able to call up investors or meet investors or have someone connect you with investors and say, look, I want to raise capital for this business. Here's my idea. Here's my goal. Here is how I'm going to make you money. Because that's what people want to know. That's what an investor wants to know. And so we like to use right now Isaac Hayes III because of what's happening with fan base. He is literally doing it in front of our eyes and using social media to do it. He's getting on. He's telling people, hey, we raised $7 million. Hey, we're at $8 million. Hey, we're at 8.1 million, 8.2 million. And it's because of you, and you can invest as well. And so he tells you exactly where to go because you can do it online. You can go right in. I think the shares are, I think you have to do a minimum investment of $3.99.
399.
Yeah, I want to say they're $6 each. Let's get the people some real stuff. We ain't gotta make it up. We ain't gotta make it up. People, stay with us. Stay with
Like
us.
I
Let's
said too,
see.
man. Man, I'm so proud of that brother, man, because think about it. This is Isaac Hayes for y'all don't know, man. Truck Turner, you know what I'm saying? Isaac Hayes Shaft, you know what I mean? That's the man. So with all that going on, you know what I mean? He's probably been in rooms with people like that or in that particular area. So he's been exposed to it. So that's why I'm so proud of his brother and what he's doing, man, because folks, let's rock and roll, do that.
All right, let's check this out. So there we go. Put us down at the bottom. So of course he got a beautiful website built. 8.2 million raised so far. Invest button right there in the middle. We said that it was a Regulation A offering. You can sign up and get updates. He gives you your reasons to invest. They launched 20 features. How is he building those features? By paying developers from the money that he's raising.
Would
And
you
so he's telling,
would you consider that estimated use of proceeds?
oh yeah, estimated use of proceeds,
There you go.
hiring, developing, giving you the traction. So our traction is for an investor. You're investing, you're thinking about, okay, why would I invest in this? Over 835,000 users, filing patents. Get rid of this. Content creators is the really who he's targeting to come use the app.
And is there
And
a monthly subscription for the app?
no, probably going to sell just like Facebook. Ad free experience. Ooh. Content visibility, no suppression. Okay, so here we go. Your question. So he's got free followers and paid subscribers. It's a hybrid model. So subscriptions can range from $2.99 to $99 a month. So I had to see. I don't know who pays that or how they pay it. We will have to see. They got a revenue sharing model for people who are creating and getting paid on the platform. And this is literally, y'all, how you can go for your business, get you a page like this, put it out on the internet, go on social media and talk about it, and then get over there and invest. And it gives you some popular investments amounts.
And
Let's
let's
see.
step back for a moment. Go back to the part, Tyrus, where it says, how many people do they have right now? Oh, what is it? 800,000?
Over 850.
835.
Okay, so look at this. So 835,000 people. And let's just say you said from $2, right? $2 to what was the other one? $99 a month. Let's take $5 in the middle. Now I ain't trying to be in the brother's pocket, but let's just say of that percentage, $5. So think about that. Let's take 835,000 times $5. And when do they pay these subscriptions?
Probably pay them monthly.
Let's say it's monthly. So let's just do that because now that's another generating revenue. And not only is he generating revenue, but he's showing the investors that look, we've got another stream of income coming in on subscription. So think
40
about it.
grand,
Absolutely.
40 grand a year.
How much?
40 grand a year.
No, a month.
Right, right. So it's 835 times 5, right?
835,000.
Or 835,000.
Well,
Eight-
all of those people ain't paying. Most of those people probably free.
So, but
So
it's going,
let's do 100,000.
that's why I said just do like $5 because it's anywhere from $2 to $99.
So
So
if he has 100,000 that's paying, that's 500,000
Hmm.
a month.
Yeah,
a month.
a month.
You times that by 12, that's 6 million a year.
There you go. So look at what happens. So now he's showing the investors this is the way we can show you how to get your funds back. But guess what? Not only that, he's going to do a Regulation A. So what does that mean? He's in a pre-IPO mode right now. So all these people that are investing, when he goes IPO, initial public offering, they're going to be able to dump their shares because people don't realize where you're going to be buying your shares from. You're going to be buying it from the investors now that are buying in at $399 or whatever it is. I said,
Real
I'm
quick,
so
Tyrus. Go back, Tyrus. Go back. Go ahead, Kyle. Sorry about that.
no, I'm just saying I'm so proud of his brother and what he's doing, man, because he's literally showing everybody. But guess what? When Sean and I were coming up, we couldn't do this. There was no such thing as general solicitations. And he's taking advantage of what's supposed to be done. And guess what? There should be other people doing the same exact thing. We should be tired of the people fighting over the same $5.
Mm.
Yeah. Go back up. One more slide, Cal. Tyrus. What? Keep going. Keep going. Where it says 8 is okay. Right there, right there. The growth rate. Okay. So it says 825K growth rate 27%. That's probably a year, right? So let's say he's going public in 2 years, 24 months, right? So now what you do is you tell the investor, you say, look, this is how we're growing. So by the time we go public in 2027, right? And I'm not sure what years he's going public. I'm just saying this is what you say to him. By the time we end up going public, we're going to have, let's say, over 1 million investors paying approximately, let's say, like Cal said, $5, right? So now the investor is scratching his head is like, wow. So you guys are going to be making probably about 10 million a year. Okay. And I'm getting it in right now at 399 so now that entices the investor to invest more money into your company. Because again, if he's looking at the growth rate and he knows he's going to do an IPO in 2 years, the investor already can see, he can already do the math in his head at 27%, how much is it going to be growing?
Hmm.
You understand? So he understands how much the revenue is going to be increasing. Every time the revenues increase, what we teach our people in our class, when you get more revenues, you set, let's say biannual, whatever, you do press releases. The press releases help investors or get investors more information on the company. It gets them excited. So now your previous investors, they're looking at investing more money. The new investors, hey, I might pick up some of this. And the cycle keeps going. The previous investors invest more money, the new investors coming on. These new investors that came on, now they're the ones that's investing more money in it. That's usually how it works. It's a lot easier for an investor, if he's already invested money in your company, it's a lot easier for him to invest more money in it on the second time around. We call it second trading. We call it second, third trading.
And guess what? The people that are coming in later, they're going to be getting caught up in the momentum, but they're not going to be getting it at that price.
Bingo.
Right.
People have to understand it. You get in at the bottom when it gets started, and by the time it gets up, boom, that's where the real wealth is made. And this is why people need to understand why you need to take your company public. Because the people that helped you in the beginning, they're getting in at the beginning, so the price is low, like 50 cents or 45 cents, whatever it could be. Now he's saying a minimum is $3.99. That's the minimum. Then after that, when I just looked at that, they said 800 or something. So that was 800. That was different levels of investing. But think about the people. And was that 800 a share? When
No, 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 no. That was the number of people that are on the app.
no.
800,000.
So there was eight. You showed three different levels of of that they could get in.
Oh yeah, yeah, yeah. That was the recommended where you could get in.
Right. Okay. I'm gonna say because a couple weeks ago I saw it was 3.99. So
Yep.
that's a share, right? So 3.99 a share.
No, no, no. You can it is 665 per share, but you have to invest at least 399.
Okay. All right. Great. Yeah. His brother got it together, man. I'm proud of him, man. I am proud of him, man. Isaac Hayes the third, make it happen. Oh, by the way, I just want to give you another plug. Shaft's my favorite movie.
All
But
right, so
imagine this, Tyrus. Imagine this. Let's say he has authorized 1 billion shares, right? 1 billion, right? Which is not a bad, number. I mean, these companies. Some companies got like 3, 4, 5, 6 billion, right? But let's say he has at least 1 billion, right? And he gave himself like 50 million shares, and the stock opened up at $5. We'll just talk about let's break that number in half. Let's say the stock opens up at 2.5. Right? What's 2.5 times 50 million, Tyrus?
100 million, over 100.
100 million.
$100 million. And all people invested was 8 million. He might go to at least 20 million, right? Doing it this way. So people invested, let's say 15 to 20 million, and now his net worth is $100 million.
And look at the valuation of his company right now. This is a mobile app. So what is he paying for? Really, his overhead is what? Server space.
Yeah.
Server space, the IT, the technology, everything he's doing. He's probably got some intellectual property in there. But I mean, basically, and what does the app do? What makes the app so special? I mean, this is not like, open AI or anything. You know what I mean? So it's just he has a great idea and he's got sizzle and it's phenomenal. But let's just take it up to one more notch, right? Let's really put some perspective on this. Think about this. Netflix has over 200 million subscribers worldwide. Let me say that again. 200 million subscribers worldwide. That's Netflix. Hulu's doing good too. And let's just say with the monthly subscription of Netflix, let's take the average. Let's say it's $10. You do the math. 200 million times $10. How much is Netflix making a month? Let's take a look at Disney. Disney. How much are they making a month? They took all of their content off of Netflix and Hulu and every place else, put all their content on their own mobile app, created it. Not only that, they also bought Star Wars. So they took all that, they put that on there, all the Star Wars, all those people. And then you also got the, what is that? The Marvel Universe. So they put all that on there. So all the Marvel pictures, all the Star Wars pictures, all the Disney content. And now they charge people a monthly subscription. I think it's like $13 a month. And I'm not even sure how many subscribers they have, but they created there's something like $30 million out of thin air when they created the mobile app. 30 million a month. Do you guys understand what I'm telling you now? If you have a business, if you've got a company and you don't have a mobile app, you might need to put one there.
Yeah.
So yeah, going when you have a publicly traded company, again, you can make a lot of money. You can make tons of money. And again, if I'm just assuming. I mean, I'm just saying, if you have 50 million shares and it opens up at $2, 2.5, that's 100. You're worth $100 million. You're worth 100 million. So now you can go out and you can leverage your shares and buy your houses, your cars, and things of that nature. That's what the billionaires do. That's why their taxes are so low. They're not receiving no salaries. Their salary is the shares. A lot of them, if they perform really well, they'll get more shares.
When Isaac Hayes the third company goes public, that brother's going to be a billionaire. And just think, he went from, in a matter of years, a concept and an idea to a billionaire. And I'll be honest with you, I don't want to take anything away from the brother, but anybody else can do it too. You just need access.
Yeah.
Absolutely. So from what I can see, he has issued total 25,270,626 shares. He owns 16,625,000. So he owns 69% of the shares right now.
61%. Yep. So when it's all said and done, he might only own, I don't know, let's say 50%, 49%, something like that, but he'll still be the majority shareholder. Nobody can kick him out, hostile takeover, anything.
Right. And he's probably not going to let it go below 51 cents for a while. So
51%.
we're going to keep it at 51% for a while. So he's just giving room right now. Major buyers to come in. If he's at 69 cents, he could drop off a little bit more. But that percentage that they buy from him, 5%, 6%, whatever they buy, that's gonna be a hit. He's gonna bop them upside the head.
But what'll
Yeah.
probably happen is, hopefully the brother goes public first. But he's going to get a Facebook or something like that come in and try to buy him out.
Or Nvidia or Universal or anybody. I mean, the company that owns Universal and NBC is actually it's out of France. So all those companies like that, they're going to come for him. But yeah, but plus he's a music company, so
And let's talk about this too, because we talked about this earlier about running in the red. We're in 2025. In 2023, the company had a net loss of 1,610,000 and an accumulated deficit of $6,869,000.
Yeah,
And so businesses go in the red
of course.
and they raise capital to get out.
Yeah, I mean, I was on another podcast before, and I basically said it's okay to have debt. It's okay. It's okay to operate in the red, because a lot of times, if you're raising capital, if you're buying assets and things of that nature, your revenues aren't exceeding how much money you're actually spending as far as the shares. I mean, excuse me, as far as with the investors' money and stuff, right? You're just not making enough money. So if I'm basically running up the bills using the investors' money, I'm going to be in the red, right? If I'm building my company, I'm going to be in the red, especially if I'm making moves. It's okay. But eventually, all of your plans that you're doing have to oversee the output. And that's when people say they're turning a profit, that's basically what it means. Look at all the stuff that Uber Eats and Uber and stuff is doing, right? And how long has Uber been out approximately?
No, since 2020?
Uber,
Oh, Uber. Yeah, 2018, something like that.
2018, right? This year they're supposed to turn a profit this year, but look at everything they've acquired in the process, right? Over those, you know, 5 years or 4 years or whatever, or 5 years. Hold on for a second. 2018, 24, 6 years, right? Look at everything they've bought, right? They have Uber Eats. They have is it Instacart or DoorDash?
Instacart.
They have all of these other companies that they purchased.
But remember, they started off as ride sharing.
Yeah,
Started as ride sharing.
right,
They created something that came to it.
right. So
Yeah.
all of this stuff, their revenues haven't overtaken, but this year they're supposed to be profitable.
And let's not forget, Amazon was running in the red for 13 years. So what were they doing? Building infrastructure, buying space out in the desert or in isolated places so they could build huge warehouses. I mean, right now where we live at in Charlotte, there's three huge places. I mean, it's like a mile long that these people work in. What are they building? Infrastructure with trucking, logistics, the little vans that are out there right now. Uh, basically the way that their missions and how they run and what they're doing. Airplanes. I mean, all of that was doing 13 years of building the automation. You know, what they were doing to get that done, the technology, the talent that they hired. In 13 years, they were running the red, and now look at them. But all the time, guess what? The richest men in the world. How you running in the red for 13 years, but you the richest man in the world?
It's another world. Yeah, they got more data on, of course, because as you are working and when you start to put yourself out there to take your company public, you have to report this stuff. It's public. It's not a secret. You're not hiding it. So it has where he issued 16,625,000 shares to himself. Then he issued 875 to a consultant. And then he ran three regulation CFs where he raised 3 million, 2 million, 4 million, and now he's running the regulation A and at 8 million already with that. So
So
go for
real
it,
quick,
Kyle.
Tyrus,
I'm going to say,
each
yeah, real quick,
CF,
Sean. I'm going to say, yeah, real quick, Sean. Tyrus, didn't we have this conversation a couple days ago? And what did Sean and I say? He probably did a Reg C CF, ran it enough, just like we teach people. Go and do a Regulation CF, get your money up so that you could pay for a Regulation A with us. So he did three Regulation CF
yep,
because you could do it a year. So you can read right there. This is exactly what we teach, and we shared that with you a couple days ago, and you just read it. And we didn't even
Yep.
read what you read. We
yeah.
already knew that. Go ahead,
CF, you can raise
Sean.
up to 5 million. CF, you can raise up to 5 million each year.
Beautiful.
Excuse me,
Beautiful.
crowdfunding. For people that don't know what CF is crowdfunding.
And I want to say, last thing we'll get off of here. Yeah, right now the valuation for fan base is 160.03 million.
It's not bad. How
Not
many
bad at
people?
all.
Let's look at this. My mother worked at a job for 27 years. 27 years. She didn't have no equity in the company, zero equity. She worked there, and meanwhile, the people in General Motors got richer. Why can't it be you? Why can't you start your own business and take advantage of things like this? And now you ain't got to worry about leaving money to your grandkids. You can leave money to your grandkids. You know, you could set your whole family up. So and we're doing it ourselves. We're not only talking about it, but we're actually actively doing it as well. So
And think about this really quick, Kyle.
Okay.
We're talking about all of this, what he could be worth. The moment it goes public, if it just let's just say it stays right where it is. He owns 16 million shares. It's trading at 6.65. Let's just say it goes, he'll be worth 106 million the day it pops.
Exactly. Exactly. And
Now, what if it trade at $10
he's gonna be a billionaire.
or $12?
He's gonna be a billionaire. He's gonna be just like Mark Zuckerberg. It's gonna happen. I can tell you right now. He's gonna be a billionaire the day it goes public. The day Facebook went public, Mark Zuckerberg was a millionaire. He's got
billionaire.
16,000 people that have invested so far. 16,000. So how many more people do you think he's going to have within the next little bit of time? He's probably going to be up to 20, 25,000 investors. That is incredible. And think about it. Mark Zuckerberg only had about 500 investors. People don't even realize Mark Zuckerberg had to go public because if you have more than 35 investors, you're actually operating as a public traded company and you don't even realize it. So Mark Zuckerberg had to go public. And that's the reason why I say you just got to understand that. But I want to break down what he did again. Think about this. You just said he did three CFs, right?
Yep.
Three regular CFs. So three regular CFs. I don't know how long he's been in this Reg A, but that's 4 years. Right now, it looks like to me that's only 4 years. So this brother goes from just creating something or having a thought. I don't know how long he had the thought process, but within 4 years of dreaming, talking to people, and make it happen, he's going to be a billionaire in about 5 to 6 years status. That is incredible. And guess what? He's no different than us. So again, I don't want to take nothing away from the brother because he's doing it. But this is why we tell people, why don't you take your own company public? Why wouldn't you do it?
What you got, Sean?
No, I mean, I'm 100%. I agree with Cal 100%. I'm a true believer of, me. I'm probably what do you call it? Unhireable right now. If I put everything on my resume, they'll tell me, Sean, what are you doing here? Um, the thing about it is there's so many great businesses out here, right? I mean, Cal and I, Tyrus, we come across them all the time. So many great businesses, and if they would just have a mind switch a little bit, just think about it. You know, they're thinking about it because they hear the rumors out there and the clatter and all that other stuff, right? But these people are just doing that. They're just the people that are saying all of this stuff. They're the ones that are scared to do it, and what they're doing is they're telling other people, "Oh, I wouldn't do that if I was you. You get your company taken over." It just doesn't happen like that. It just doesn't happen like that. And if you want to take your company to the next level, yes, anybody can go to a bank and get a loan, but it's hard selling one product and getting up to $1 billion.
Right.
It is difficult. You got to sell that problem almost let's say 500 million times in order to get to $1 billion. Right? We don't have that in our lifetime. You know what I mean? We will probably pass away before that. But how you get to $1 billion is through acquisitions. Right? You can't keep going to the bank just because you want to buy something. Banks going like, well, what do you have to offer us? You don't have that much collateral. But investors are not looking for collateral. Investors are looking for great ideas. So now with these great ideas and you're looking to acquire these companies, these investors will give you more money than the banks, right? They'll say, I'll give you $1 million on this idea. I'll give you 500,000, 200,000. We had investors that gave us millions of dollars when we took our company public. I repeat, we had investors that gave us millions of dollars when we took our company public. And I didn't have the assets to get no $1 million back then, right? But investors, we know what they looked at. They looked at our business plan, our pitch deck, and say, yeah, I think it's a great idea. I'll give you 200,000. I'll give you 250. I'll give you another 200. And pretty soon we're like, wow, this guy gave us over $1 million. So
You know who the closest people I think are to capital raising and they don't even know it because they don't think about it like this is real estate investors.
yeah,
They are raising money. They don't really they don't necessarily go to banks in the beginning. They go to a hard money lender.
our money lender. Yeah, exactly. Exactly. But instead of paying that hard money back, the hard money waits till you go public. The hard money waits till you go public.
Right,
That's basically what these investors are. You
right.
know,
And think about this, guys. This is what really is so important. And that's the reason why Sean and I, we break it down in class and we tell them, I'm telling you, we got 12 modules, but I'm telling you, probably out of 12 modules, 10 of them, we make this statement. The investors are your bank. Stop going to the bank. Create your own bank. We had a conversation with a guy today, and what did he tell us, Sean? He had over 400 investors.
yeah,
That is your bank.
that is your
Now,
bank.
guess what? Can you present your business plan, your pitch deck? Can you present that in a way where basically you can entice investors to want to invest in your project? Because if you can do that, you now have your own bank. No, you didn't get a charter. No, you didn't sit up there and go get a building or anything like that. You basically you built a bank. Why? Because you can go back to the investor over and over and over again and again and again, as long as you take care of them. And that's the reason why it's so important to understand this. How many times do you think Elon Musk went back to the people? You think he didn't go back to the same investor when he created PayPal Mafia? And then after that, they turned around and he created what? What did he create after that? Tesla? You think he didn't go back to him for Space Link? You think he didn't go back to him for Neuralink? What he's doing now? He's gone back to him over and over and over. That's the reason why he's the richest man in the world. Everybody get that. I'm trying to tell you, I'm dropping nuggets today, Tyrus. I'm dropping them on their heads.
Yeah, it's just amazing of what can be done when you enter and you change your mindset around how we actually do business. And I think that's the one of the missing pieces. We're doing business the wrong way. We're doing business with hustlenomics and the grind and the stand up late at night and I'm gonna sell it hard and I'm gonna work hard and I'm gonna do everything else harder than everybody else to make it. And then our view of making it is less than $1 million for most people. And then the ones who do make it beyond that, they get stuck at around 3 to 7 million. And they're comfortable, they're good, but that's not wealth. You can't you leave $7 million, it's gone in a generation if you didn't
Yeah,
teach them.
yeah,
If you didn't teach them, it's gone.
yeah,
It's hard to get rid of a few $1 billion.
yeah.
It's not impossible, but it's sure hard to do it. And I believe that if we just keep pressing this and sharing this message of try a different way, it will eventually take sync. The only other thing I can think of, with people thinking that companies will take you over or you got to give up a large percentage of your company, some of that comes, I would say all of it comes from misinformation, but I know where a little bit of it comes from because somebody said it to me. When I told them that we were going to take this company public that we have together, they said, you got to leave about 20 to 30% because of the institution that's going to help you. They're going to take that. And
Yeah,
so what they didn't know is I got two people
yeah.
that know how to do it, and we don't need the institution.
And we know
So
it's
if you go to Morgan Stanley, sure,
yeah,
they might ask for 20 or 30% to put you in the game, but you don't necessarily have to go that route. If you
yeah,
do go that route, fine. You got to have the money to get in. What Sad told us, you got to have 500K to walk through the door.
yeah, yeah.
For
Sometimes more than that, Sometimes more than that. I just want to say something real quick, and then I'll end it on my part. But why do people work hard in their business, basically? Me, and this is a kind of like a trick question, but why do they work hard? I'm willing to bet. I haven't done a poll on this, but I'm willing to bet most people who don't raise capital, they work hard on their business, trying to make a dollar, right? Trying to get sales and things of that nature, right? Because they need that money. But what do you work hard on if you already have the money? You work hard on building your company.
hmm
And then eventually your company start producing more sales. And see, that's the advantage of raising capital. You no longer have to work on keeping your doors open by making sales, right? You work on your company and building your company up. And that's the difference.
So what you saying, Sean, is you actually become an owner and not the operator.
Exactly. Exactly.
Because most of us are stuck in the operator and we think we own a business, but we really own a job.
You're just working. You're working, you're doing the same job as you was in the sales department of Amazon. Same
Right.
thing.
You got to learn how to work on your business,
Yep.
not in your business. And that's the reason why you need to be able to hire talent, hire people that can take it. But a lot of times, what we're concerned with, we're worried about somebody stealing our idea. There's nothing new under the sun.
No.
You know what I mean? So I'm not worried about nobody stealing our idea. When Sean and I put this together, what we were doing, we said, look, you know what? We did this, over 20 some years ago, and nobody's still doing it. So
Nobody's doing it.
somebody taking this. We did this. We went public 20 some years ago. You know
Yeah.
what? Almost what 18 years ago, and nobody is teaching the Capital Raising Academy. So we're like, let's just go do it. We hope that there's 10 people that follow along and do what we're doing. It don't matter. What's for us is for us, and what's for them is for them. And that's the reason why I'm happy as a mug for Isaac Hayes III and what he's doing, man. God bless that brother, man, because he is waking up some people and opening them up. And this is what Sean and I have been yelling from the rooftop for years. But he's living proof. And there's more companies out there we could talk about and relate, but he's the only one that looks like us.
And I hope people are seeing what he's doing and not just, I don't know how to even say it. You know how we look at stuff on Instagram and be like, oh, that's cool. Oh, that's nice. But then we don't even take advantage. We don't invest in his company and we don't do it for our company. We just kind of see it happen. And then we get to a point to where, man, I can't stand those rich people that all they do is get money and make money. And I don't like them. Well, you didn't take the opportunity. You watched it happen.
Right.
It's happening in real time and I ain't gonna say from scratch. He's been doing it a while, but right now it's the hype, and we're watching it happen. And like you said, Kyle, when he goes public, whatever happens when he hits that, it's gonna be like if you didn't take advantage, you missed it.
Right.
And we don't see this often. Like I see it because I go and look on the sites and I'm looking for businesses that are raising capital like he's doing it and using public solicitation. But if you're just perusing Facebook or IG, you don't see that.
Yeah.
That's why it's a world within a world. Because if there are thousands of investors investing in these different ideas, I can go to a website and just show you a list. That means there are people out there doing this every day.
Yeah.
And you have to ask yourself, what world are you living in? Are you still just consuming content, mindlessly scrolling, trying to blow off steam versus building your business? I'm going to say these last couple words and then we'll go around the table, close out. The question might be, now that we know what it means to raise capital, well, where do I find the investors? And each one of us could kind of give some places. Here's where I think we can find investors. Networking. Going to meetings, whether it's real estate, business meetings, anywhere, and just talking about your idea. When I got into house flipping and I needed the capital, of course, I would just talk about flipping houses. I would talk about my plan on flipping houses. This is what I'll do. This is how I do it. This is what the plan is. And a guy I worked with, he owned his own company. He asked me, he said, why aren't you doing it? You talk about it all the time. Why aren't you doing it? I said, I don't have the money. He asked me, what would you do if you had the money? This is where it's important to have your elevator pitch, your 30 seconds, the time you get to shine. After I went through the 30 seconds, I had my plan. Boom, my idea. He said, let's have a conversation outside because we were at work. So we went out, had coffee a couple of days later, went through everything, how I would do it, wrote me a $100K check on the spot. My first investor. How did I find him? Just by talking about the idea around people that knew me. I wasn't asking any of them for money. I worked with them. Just talking about it. So that's number one. Number two, you can find investors by going in Facebook groups of business buyers. Mergers and acquisitions. Selling businesses. All those groups are filled with people looking somewhere to put their money. I would say number three, you have to put your big boy pants on, big girl pants on. And in your business, you need financial advisors. You need CPAs. You need attorneys. You need insurance agents. You get around the right group, they know what they call high net worth individuals, high net worth families. They represent maybe NBA stars or professional athletes or celebrities. Guess what all those people have? Money.
Yep.
And so if you're just talking, and I'm not talking about you're begging people for money, I'm talking about you sharing what you do around your network. And if you network with the right people, they will put you in contact Because if I'm networking with a group of CPAs that work with high net worth individuals, all they're talking about is money and what their next investment is. And they may say, I heard so and so talk about that. That's a great idea. I heard so and so say he had $1 million he need to put somewhere, and there's a connection. So I have about five more places you can find investors, but I'm gonna just stay with that one group of just talking about your idea around different people, and you will find an investor.
Yeah, go ahead, Sean.
No, no, I was just, thinking, network events. I'll give you like an example. I know a gentleman who operate all the Black Chamber of Commerce in the southern region of the United States, and he does these calls. It's like 1,000 people on it. Seminars. Um, for example, we're having a seminar on March 28th, 29th. We give opportunity to the booth uh, present the people that that sponsor our seminar the opportunity to go before everybody in the audience and talk about their company. And they're going to have a little table and things of that nature. Now, people will come to your table and say, "Wow, that's an interesting idea. How do you invest in that company? How do I invest in your company?" That's an easy way to be in front of people. I don't, to be perfectly honest, doing the one-on-ones, it's okay, but it can be draining. I like talking in front of a lot of people because I could get more accomplished.
What about you, Kyle? Where can we find investors?
Yeah, like everybody said, network events, but there's clubs out there. There's organizations that they particularly are fundraiser, venture capital organizations. Family offices. We met one gentleman that he actually went down to a place to meet a bunch of people that were family offices. What do you have to pay, Sean? What, 10 grand to get a part of it?
Yeah, something like 10 grand, 10, 15 grand.
Before you keep going, Kyle, I don't mean to interrupt you. I
Absolutely.
didn't even know until I met y'all and started actually looking at and getting into this. I saw the word family office. I'm like, what is that? I didn't even know what it was.
Yeah.
For everybody else that's listening that may not know, a family office is usually a family net worth more than 125 million, and the family office is their investment lane where the family pools their money, and they have either a CPA, a firm, or even a individual family member manages that family's money and invest it. So go ahead, Kyle.
Yeah, so what we'll do is, after we get, we rocking and rolling, we'll take you down there. But it's a spot where you can just go meet, and they have a meeting. You join the club, but it's 10,000 just to be there. And this is probably the hardest thing that we have to get through our people when we say it. You might hear it, but I don't think they get it. It takes money to make money. One of the things that we say in the chiefhood, what I mean, basically with the Chiefs community, everybody know I'm a Navy chief, retired, but we'd say it's a motto. It takes a chief to make a chief. You just can't become a chief. Somebody else has to teach you how to be a chief. Well, guess what? If you're not used to making millions of dollars, you're gonna have to be around other people that are making millions of dollars
There you go.
just to learn the traits and how to be the characteristics of what it takes to be a multi-millionaire.
That's
There's
it.
a book out there called The Millionaire Next Door. You probably got a millionaire living right next door to you, and you don't even know
Yeah, because he's not driving around in that Maybach and that stereotype that people you think have a lot of money.
it. Yeah,
But I got another way to find investors. Our call center. We have a call center, and we basically find investors. We find accredited investors. Accredited investors are people with money that invest in different types of companies. So our call room will call people and verify, qualify them basically.
right. And then we give the lead to you to go ahead and close. But I mean, we're just teaching you guys. That's how we built our business. We had a call center. Back in the day, you guys might have called it boiler room or whatever, but it was ours because why? We were selling our own shares. We weren't selling anybody else's shares. It was our company's shares, And that's what we teach people how to do because we did this, basically what, 18 years ago. And that's how we took our company public. But like we said, we weren't out there doing stupid stuff. Sean and I had a vision, we had a goal, and we were determined to get the results that we wanted for our investors. And what do we tell them all the time? We're going public. We're going public. We're going public. So when we went public, guess what? They were happy. That's the reason why I'm so proud of this brother, Isaac Hayes III, because he's telling everybody, we're going public. Now, he might not be saying it like we did. We had to be intentional because there was no such thing as a Regulation A 18 years ago. But if you don't know a Regulation A, let us help you out this evening. It's called the mini IPO. And that means all those shares that he's selling right now, that means those shares, when he goes public, they're going to be freely trading, no restrictions on them or anything like that. And they're going to be dumped right into the market. And guess what happens? He's going to be wealthy overnight. So I'm looking to meet this brother.
I hope somebody can connect us with him and see how he's going, what the plan is. I want to know who's in his corner. I want to know who's helping him. I want to know who is taking him on this journey to that going public phase. Because if he goes public, when he goes public,
If
he's gonna be another minority publicly traded company.
number 7.
And he gonna beat us. Hold on, we gotta pick it up. We supposed to get, he gonna beat us to the punch.
No,
That's all right.
But think about it. The race don't go to the speedy, but to the one to the door to the end. So we gonna be all right. Whether we get 8, 9, or 10, we gonna be in the top 15. I can let you know that.
Yeah, we'll be at the top 15 for sure. For sure. I can only think of, and I don't know around the country who else is trying to do this, but publicly you hear nobody talking about it. And I was on LinkedIn. I was amazed at the number of just minority individuals that are in private equity or in venture capital. They don't talk about going public at all. They just talk about building their firms. They talk about not being able to raise capital from the white firms, but none of them are talking about going public. And Sean, that goes back to, I'm gonna go back to what you said earlier about how everybody wants to do it on their own. I literally have conversations with people that want to sell me something, and I'm like, I do that. Like, we do the same thing. Why not come together? Why not you have your people and I have my people and we bring those people together? It's
Right.
it's so much of, we want to have little pockets of everything. Everybody wants to do another conference. Everybody wants to have another event. Like, just have one event
Right,
and blow that thing out.
right. And
Let's do a
that's the reason why we shared with you with what we're doing with our class. We don't want to sit up there and just say, okay, now upsell to the next thing and to the next thing and to the next thing. We don't want to be a part of that. You know what I mean? We want you to get into our class, get educated, understand these instruments, and then go take your business and thrive and then give back to your community. That's what we want to do. But we don't want to keep upselling you, take you to the next thing we got in the next class we got in the next. That ain't what Sean and I are all about. And that's why I
Yeah.
said we love what you do because you took us to another level. You put our stuff on Evergreen and you took us to a point where you made us digital. You turned Sean and I, Capital Raising Academy, into an IT company.
Yeah.
Guess what you've done to us? You put us on the fast track right now to do exactly what he's doing. So we appreciate you for that.
Oh yeah, I appreciate y'all because
And it was getting rough doing them calls every night.
they got tired.
Right. No, the VIS sheets. We were
Jeez. Oh my goodness. Be on the call for like 5 hours. Be like this. I'll be on the line like this.
right. Tyrus made our VIS sheets digital. So now we just text them to people. That's a
Yeah.
beautiful thing, man.
And I've been thinking about that business information sheet. For everybody that's on here, we just talking about, we hang it out. So hang out with us. You'll learn some more stuff. I was thinking about the business information sheet and how we can automate. So when people go to the website and learn about us and then they want to join our newsletter, we automatically kick them out of business information sheet. So we'll know what the businesses are, who they are, what they do, and what they need. That way we could curate and provide the right information to them. And so for us, of course, and let me go and cue this up so we can get ready to get out of here. March 28th, 29th in Charlotte, we have our first event, our live event. We only got space for 100. Tickets go sell. We already sold, our sponsors. I think the top are gone. We only have the tables now. And so if you want to sponsor the event and get a table, then reach out to us. You can go to the website, let us know, because this event is what we're going to call our catalyst, our kickoff. That's when we're going to unveil our own public raise. If we don't do it before then, that's where we're going to unveil our program and how it's really going to take your business to the next level, with us potentially investing in your company. So you ain't got to go find the capital no more. We here. Come get the education, come get the capital, run with your business. That's all you got to do. And so join us, share that link with everybody that you know, because this is information that Sean and Kyle gave me. I went and found and researched and compared. It's the information that the big boys got, your Morgan Stanley, your JP Morgan private banking, your Chase private banking, all these companies that have that private side. This is what they're doing, but they don't share that information. You got to pay them for it. Now, you got to pay us too, something, but you ain't got to pay what you got to pay to work with them. We ain't asking for 20, 30% of your company.
Right.
We're not telling you that you got to have $1 million for us to take you through the process of going public, just to take you through the process, on top of the attorney's fees and the paperwork and documentation and all that you need. So
And the
come to the event.
Yes. I was saying, and the evaluation of your company, because some of these large broker dealers, they don't want you if you're not $1 billion valuation.
Yeah.
Very true. Very true. And so check us out, grab your ticket, travel to us. You'll travel to a Super Bowl game. You can travel to us right there in Charlotte, North Carolina, March 28th, 29th, and reach out to us. You're on social media, you're on YouTube, you're on Facebook, you're on IG. Send us a message. Ask a question. The worst thing you could do is come and listen and then walk away with no action. Ask questions. Set an appointment. You can go to our website, legacywealthcapitalgroup.com. You can book an appointment. Ask the questions, because as we take our journey, we watching Isaac Hayes III. We own him. We're going to be on his heels. When he pop and go boom, we're going to be next up. And that's the same thing we want for you. You got to be next man up. That's what, and I'll close with this. Alabama, before Nick Saban left, was known for next man up. We had the top of the line. When they went to the NFL, next man up, top of the line. When they left, next man up. Now we want to have next business up. Who's the next business that's going to be $1 billion business? Who's the next business that's going to raise millions of dollars in capital? Who's the next business that's going to make impact in the world? It can be you. But you have to change your mindset and get around the right people. And I have nothing against the rah-rah events where you go and you get hyped up and you get pumped and you get motivated. That's needed. But once you have all that motivation, you got to have some real implementation behind it. Where are you going to get that implementation? Where are you going to get the nuts and bolts? When you hear a Magic Johnson or Rick Ross or Bill Gates or Mark Cuban, when you hear them talk about their businesses and how they acquire businesses and the deals they've done, and you get hype behind that, what's next? You got to come get the nuts and the bolts. And that's what we're going to give you at our event. The actual nuts and bolts of how you do this thing. And then it's all on you. So that's all I got, gentlemen. Any last words before we get out of here?
Yeah, I'd say, and not only can you get at our event, but also too, we're going to be starting a new series of our Capital Raising Academy. So you can go to the website, www.capitalraisingacademy.com, and go ahead and get registered for our class where we teach you about these financial instruments. Reg D 504, Reg D 506, Regulation CF, Regulation A, series rounds, A, B, C, and D, pitch decks, venture capital. How do you pitch to VCs? All of this, we go through it. Each module is designed to help you learn and understand. So we're going to be going through that and doing it. Get registered for our class. And basically you could learn exactly what we teach you, everything that we did. But the last thing that I want to say to you guys out there, and thank you for, we don't take this time lightly. We know you could have been doing something else, but you're here with us. You got to pay to play. And you guys that are in business out there, I know sometimes you think it's hard. It's wicked. For us to learn to do what we did, we paid $25,000 for the right to be able to raise capital. Let me say that again. We paid $25,000. And that gave us the right. It was the instrument that we needed to learn how to raise capital. Now we can show you guys that for less than that. But that's what we paid back in the day. So I just want to put that out there. You guys are going to listen to us tonight, and then you're going to turn around and go to YouTube University. You're going to go to Google University. You're going to go to Chat GPT, whatever. Get it firsthand, for people that have done it. Other than that, don't get it from people that are teaching you theory. Get it from people that have done it, straight from the horse's mouth. Have a good evening.
Yeah, I just
All
want
right.
to say my heart and prayers go out for the families of the plane wreck, and I guess it was what, DC. Just want to give my heart and
Mm-hmm.
say prayers for you guys. Keep the family in my prayers, in our prayers rather. And that's pretty much it for me. Thank you guys for joining us tonight.
All right, good people. That's all we got. We will see you all on the next time around. Join us next week. We'll be here again next Thursday night, same time, same place. Hope you have a great night, and we'll see you soon.
Take care, guys.
All right. Thank you.